Hi guys, welcome back to this week's Technical Insights. The S&P 500 and Nasdaq Composite Index declined on Friday for a fourth straight session and notched their worst week since March. Traders seem to be booking profits following the latest corporate earnings and US job data. The Dow Jones Index lost 150 points or 0.43% to end at 35,065 points. The S&P 500 lost 0.53% to finish at 4,478 points, while the Nasdaq Composite dropped 0.36% to settle at 13,909 points. All major indices reversed earlier gains in the day and finished the week with losses. For the week, the Dow slipped 1.1% and the S&P 500 and the Nasdaq Composite Index dropped 2.3% and 2.9% to close off their worst week since March this year. Friday also marked the final day of what has been the busiest week of the second quarter's earnings season. Amazon jumped 8.3% to its highest level in nearly a year after beating expectations of profits and offering positive guidance. Apple, on the other hand, lost 4.8% after reporting a lower revenue than the year-ago quarter. Earnings report this season for the quarter ended in June have continued to surprise many analysts. The expected slowdown in profits proved less than feared, and about 84% of S&P 500 companies have given their results, and almost 80% surpassed analyst expectations. Investors also received more clues in the state of the economy and the labor market with Friday's non-farm payroll report. The data showed 187,000 jobs were added in July, less than the 200,000 expected by economists quoted by Dow Jones. The unemployment rate also ticked down to 3.5% from the 3.6% the previous month. Despite the cooler headline numbers, average hourly wages pointed towards more inflation and came in ahead of expectations, rising 0.4% for the month and 4.4% on an annual basis. This came in slightly higher of the 0.3% and 4.2% expected. Traders had been eagerly waiting for the job report and its implication on the Federal Reserve rate hike cycle. About 87% of traders expect the Fed to hold rates steady at the next meeting on 20th of September, according to CME FedWatch 2. Fitch Ratings, one of the three main credit rating agencies, dropped US government credit rating from AAA to AA+. The agency cited expected fiscal deterioration over the 3 years and a high and growing general government debt burden, and the erosion of governance. The debt ceiling crisis of recent months, which took the government very closely to reaching a default, was the main reason behind the downgrade. For this week's technical analysis, I'll be touching on PayPal Holdings. PayPal Holdings is a technology company that operates an online payment system mainly in the US and of course around the globe. The company's stock price has been on a downward trend in recent months, but it has recently started to show signs of a reversal over here since the beginning of May. The daily chart of PayPal shows that the stock has been trading in a descending channel since the beginning of January. The channel has a downward slope and the stock price has recently bounced off the lower support line of that channel. This suggests that the trend may be reversing soon. The RSI indicator may also show signs of a potential reversal, as the RSI for PayPal is currently at the level of 32, which is close to the 30-point mark for the oversold signal. This suggests that the momentum may turn bullish once it crosses below the 30-point mark. Volume has been increasing in the recent months since the beginning of May. Compared to the previous few months, as you can see over here, the volume since May has been significantly higher than in the periods of February, March, and April. This could suggest that the rebound or the reversal may be gaining momentum. The stock price has recently found support at the lower bound of the downtrend line of the descending channel, around the $59 level. This is a key level to watch, as a breakdown below this level could signal a resumption of the downtrend. The stock price also has a resistance at the upper bound of the resistance line of the descending channel, around the $75 level. A break above this level would definitely be a very bullish signal. The technical analysis suggests that PayPal may be in the early stages of a potential reversal. The stock price has bounced off the lower support line of the descending channel, and the RSI indicator is close to triggering the oversold signal. Volume has been increasing since May, and the confirmation may come from the MACD indicator once it turns positive. I suggest you monitor the prices of PayPal closely for sign of a continued reversal. If the stock breaks above the upper resistance line of the descending channel, it will be a positive breakout and a very bullish signal for PayPal to return to its previous high of $88. However, if the stock price fails to break above the resistance line, it could resume the downward trend and reach a new year-to-date low. So with that, I come to the end of this week's video. If you find it useful, do give us a like and a share, and I'll see you again next week in the next Technical Insight.